What's an accounting cycle? You'll hear people talk about this word sometimes, and you can put it in context of auditing. Cycle is really kind of a processy, if you will, where there's a set of accounts that logically fit together. So the internal controls flow together. They're designed to produce the financial statements. And here's what I mean. In the book, you have what's called the revenue and collections cycle. Well, in that cycle, you see things like sales, revenue. You'll see accounts receivables and cash, because naturally those accounts fit together. Sales would produce accounts receivables, cash, etc. In this book, there's also what's called the acquisition and expenditure cycle. That's also just a fancy way to say liabilities and expenses, by the way. And then there's also the production cycle. That's where they put inventory, finance and investment cycle, etc. It's not so crucial that you memorize what cycles are, because technically the financial statements fit together as a whole. So you can break them up in different ways. For instance, maybe inventory is not in the production cycle. Maybe it's in the acquisition cycle, because that's what you're acquiring, that's what you're buying. So it's not so much that you memorize what goes in what cycle, just understand that it's a collection of accounts that naturally fit together whenever you see the word cycle, because some of you guys are going to go work in firms that will use those type of words. This is where I told you needed to spend the most time to prepare for this class. And so this is where we're going to spend the most of our time next class period. But I wanted to briefly go through what they were, just in case some of you guys did not prepare, that you have a chance, right? So the 8 audit procedures that give audit evidence are inspection of documents and records. That's where we're going to talk about tracing and vouching. Tracing and vouching is going to be crucial to, I'd say, the next 80% of this course. We're going to be doing it on every single test, which means it's going to have layers to it. It's going to get progressively more complex. So it's really important that when we go over it on Wednesday, that you understand what we're talking about, like really understand. Then we've got inspection of tangible assets, like literally going to see if something is there. That was a hint, by the way. Observation, meaning you just observe someone, watch someone doing something. Inquiry, ask. Confirmation, talk about sending out bank confirmations, accounts receivable confirmations, accounts payable confirmations. Recalculation means you literally recalculate something. Reperformance has to do with reperforming an activity. Remember how I told you that there was really important that you got a difference between understanding what it means to test a control versus doing a substantive test? It's going to come into play here. And then last but not least, analytical procedures. Anthony, you had a question? No, okay. The last one was analytical procedures, which brings us back to here.